Welcome back to another episode of Built for Legacy. I am your host, Suheyl Hernandez, and today I am here with Oscar Baez. He's the mortgage broker here at Phantom Real Estate, one of our preferred lenders. And he's been with us for like about 10 years, so basically almost since the beginning. But today I want you guys to get to know him a little bit more. So, Oscar, why don't you tell us a little bit about yourself?
Okay, well, no, thank you. Thank you for having me.
The pleasure's all mine.
Yeah, so a little bit, I'm 38 now, 38 years old. I've been doing this since like 12 years now. The years go by quick. 2011, 2012, I got into the mortgage industry when everybody was getting out.
Wow, that was
out of FIU when I finished school, and that's when I started doing mortgages, and till this day.
So talk to them a little bit about your little girls, your beautiful young girls.
Yeah, I got two daughters, 7 and 8.
They're super cute. They dance, and they're always dressing them like if they were twins. They're super
Right.
cute. Oscar, I know that you went to school. You went to FIU. But what you did in FIU had nothing to do with being a mortgage broker.
Absolutely.
What happened? Where was the shift? Why did you go to FIU? Why did you shift? What happened? Tell me.
No, I mean, I went to FIU like that's what you're taught to do, go to high school and go to university. And then in my case, it was by accident, but kind of a no, because they have career services.
Okay.
Career services, and they told me, listen, go, here's a list of companies that you could go talk to, and maybe that you find a job there. Like not knowing about a mortgage or anything like that, just fresh out of finishing FIU, and one of the companies was a mortgage bank,
Okay.
and they told me how it was and what I needed to do. Like, okay. I didn't end up taking that job. I actually took another job with a tire manufacturer. With a
Okay.
tire manufacturer, we would buy tires in China, and then we'd have to sell them overseas. So I was assigned to Mexico. So I would have to make phone calls to Mexico and try to sell these tires. And that job went well, but I didn't last there too long. It was a good job, but it wasn't there too long. So when that ended, then I'm like, you know what? I remembered about that mortgage bank, and I went back to them, and I'm like, what was that? What you guys were offering again? How does it work? And then that's how I got into this.
Wow. So I'm going to tell you something. I love these podcasts because I am learning a lot that I don't know about people that have been next to me for so many years. So this is like the Pandora box. That's what Built for Legacy episodes are, the Pandora box. Oscar, so that what happened from there? How was?
No, I went back to the company. They were like, yeah, this is you have to go, and I had to go get my mortgage certification. I did that, came back within a month, and then I started working.
Yeah.
They assigned me to to a division of basically I was helping someone to for the first 6 months to kind of like get the gist for the business, and start learning all the lingo, the mortgage lingo, with all the verbiages and all the underwriting stuff. And after a while, then I started going off on my own.
Okay, but I know that you've played several roles. You've been with direct lenders. You've been mortgage broker. Like, which one do you like the most?
Over this 12-year period, I have, the industry has transitioned to, in a way. So back then when I started, it was the lenders. So the difference, direct lender, and basically a mortgage broker is like third party. They're gonna go out there and they're gonna find the best bank for your transaction, for your file. Versus a lender, they're funding the file, so you're basically representing the lender's programs. Okay. And over the years, it's transitioned now more with technology and stuff. It's easier to be a broker than it was back then. Okay, so you do have that, but right now it's about, I want to say like 60% lenders out there, and versus like 40% brokers. It's been transitioning, and that's currently where we're at right now.
Well, that's interesting because since we've been with you for so long as a direct lender, I've seen those transitions, but I always say everybody stick to what they're good at. So I I don't really question you. I just follow you, right?
Right. I appreciate it. You know that trust.
Yeah, well, it's been a long time. Besides that we work together, we're friends. I'll tell you guys something. I call him my little brother. And when I signed my book for him the other day, I told him that I want to kill him 95% of the times. What do you guys think? Why don't you tell them that I abuse you? So
Yeah.
Oscar's something else. He's always helping me. He's the one that helped me build my new desk. Well, all the time. He's my builder.
Imagine that. That's how I get my 5%. Not even that.
That's not true. I wrote that out of love. Oscar's an amazing human, and I am glad that and honored that he's part of being a direct lender here at Phantom Real Estate. So why don't you tell them a little bit how an FHA mortgage works?
Okay. Yeah. So we'll do it in two categories. Let's say the domestic products,
Okay.
right, which is the FHA and the conventional. Those are like the bread and butter, no?
Right.
Although that has changed, but basically those are the two most common programs out there. The FHAs are backed by the government, and the conventional loans are backed by Fannie and Freddie. Okay. Those are the investors for those. Each program has their guidelines, their income, their full doc. So you gotta show the bank all your documentation, your bank statements, your pay stubs, pretty much whatever the underwriter requests. We're gonna get them that information, and we're gonna do the mortgage.
Okay. But I know that there's also other programs. Why don't you talk to them about the other programs that there is?
Right. So a little detail that I forgot to mention. So FHA, usually it's gonna be all like the low down payment programs with the 3.5% down. Conventionals, you could do the most 5% is like the most standard out there. You could have situations where you do 3% down on a conventional.
Okay.
Okay, and that's what I'm saying. That's where you see most of the stuff. Over the years, there's been changes to that and there's a whole other category or world of mortgages out there, which were called the non-traditional products.
Okay.
Okay, that's where you get like stuff like bank statements and profits and loss, different DSCR programs. So that's a whole different world of programs. Pretty much those are going to require more down payment.
Okay.
But they're like alternatives, right? So you don't have to necessarily show the bank your taxes. They are other means of documents that we're going to show the bank to do those programs as well.
Okay. Can you elaborate a little bit about when they give 20% down and the PMI and stuff like that?
Right. Well, in both worlds, okay. Once you do 20% down, you're gonna get rid of the mortgage insurance, the PMI, the MIP. Basically that insurance that insures the bank that difference.
Okay.
Okay. And also normally pricing gets better as well. If you do 20% down, you're gonna get a better rate than if you're doing 3.5 or 5% down.
Yeah, because I'm assuming that the bank is taking less of a risk.
Right, there's less risk in the transaction. Okay. Other programs, foreign nationals, that's for people that don't live in the country. Okay. We got those as well. Those in Miami, they're pretty popular.
Okay. So let me ask you. So if there's a first-time home buyer, there's a young couple in their mid to late 20s, and they want to buy their first home, like, what do you recommend? How do you recommend? And this is obviously just the general information, but what would you recommend? Steps that typically people need to take, before they purchase a home.
A young couple, or any couple in particular, basically, the less debt you have. Okay. Usually the easier it is, or the more of room you're gonna have to qualify for a mortgage, right? Because it's basically income versus debt. So the more debt is weighing on this side of the scale, you're gonna have less for the mortgage payment. So step one is to try and manage those debts, pay off as much as you can. That's also gonna help you get a better credit score. That's gonna help you get a better rate. Okay. So some of those are the basic stuff. Also, once the idea comes up, hey, let's purchase a home or let's start planning for a home, should speak to a mortgage advisor. Because they can guide them further. Maybe they have a job offer or something that they want to take, and they might take it, and that might delay it because it's changing the way that they're getting paid, right? So once you want to buy a home, consult with the mortgage advisor. And build out a game plan.
Yeah, because there's the way to do things when you're a 1099, and there's a different way when you're a W
Correct. And then
two.
there's all guidelines if you're jumping from W2 to 1099 or back from 1099 to W2. So depending on all those transitions, it could, you could actually delay what you
Correct.
want to do. So it's recommended to, seek advice before
So,
you make any jump.
okay, so the first thing that you would recommend is when it comes to mind, go see a mortgage advisor so they can tell you exactly what you should and what you should
Right. We'll
not
take a
do.
look at, right. So what we do with our customers, we look at where they're at right now. What are their, if they're planning on having a new job shortly, or they have sometimes, believe it or not, a lot of times they get like job offers and stuff. So we tell them, listen, make sure it has to, it has to flow with what you're doing. You're not, some people want to have a whole different, just the whole shift in profession, and
Okay.
that could, that could affect it. So, you just need to be at, have someone to guide you and give you that
Right. So
advice.
there's a lot of different programs, like he explained, and he'll give you his information in case you want to call him and further dive this in this with him. But that's something that maybe we can elaborate in a little bit, because people think, oh, it doesn't matter. I have a job, and it's very important to stick to the same line, and people don't know that. And you know what I mean? Like sometimes you work in the medical field, and now you're going to go work in the law, like those are two totally different jobs, and we've seen files fall apart because of stuff like that. So
All the time. It happens all the time. There's so many things they're like movies, so honestly a lot of things happen, and sometimes it's not even their fault because they're not buying a house every day. Maybe they'll buy a house 1, 2, 3 times in their lifetime, but they might just make the wrong decision. Maybe they go out there and buy the furniture for the house before they close on the loan
oh, that's a big one that
because
happens
they
all the
told them
time.
they were maybe, yeah, you guys are fine. So little things like that, it's very important. That's why we need to guide you from beginning to end, and you need to trust us.
Yeah. And another thing people don't know is that it's very important. So when you're in the middle of a loan, and I know because it's happened to me, you go to Macy's and they're like, okay, so if you apply for the credit card, you get a 20% off. And then you're thinking about the 20% off, but you're not realizing that that's just jeopardizing your loan, especially if you put things on the card. So that's very, very important also. Oscar, if they were going to come to you to get pre-qualified, what are typically the documents that they need to bring in?
We usually like to start off with a phone call. Like to talk to them first, ask them a few questions, and then once we get, I get a little bit of feedback for their situation, then I'll email them the documents that they need. And I like to meet people in person. When I started, that's what it was. That's how it was. It wasn't all this technology yet. It was about to start, but it hadn't started yet. So we're doing everything on paper still. I like to meet with the people. Nowadays we do Zoom too if they can't make it to the office, but it just kind of builds a little bit more warmth and trust. What moving forward, is going to be it could be a long process or it could be a quick process, but we want to make them feel comfortable. So once they gather their basic documents, usually it's going to be for the very beginning, it's just going to be basic documents, normally like pay stubs, bank statements, tax returns, W-2s. And then we'll start adding. As we start, analyzing the file, we'll start adding whatever other documents we need.
Yeah. And also, it's good for them to understand that these are the documents that are needed at the beginning, but then as the process goes on, the underwriter can request.
Oh, absolutely. That's just to start. Once the file, once we're in under contract, the underwriter will request additional documentation.
Yeah.
That's how the process works. We get a file ready, we submit it to the underwriter, they will come back with more conditions, and then we just basically gotta clear all these items that they're asking for until the file has been completely cleared and you're able to close.
Okay. What's the fastest file you've ever closed?
8 days, 10 days.
Yeah. And which one has been your worst nightmare?
Yeah.
A few, huh?
Oh yeah. Oh, I gotta. There's always those that are like very interesting stories.
Okay, Oscar, talk to me about your latest nightmare. What happened? Your latest nightmare?
Oof. I mean, let me see what I could talk about on camera. There was one transaction recently where the husband was buying a car,
Okay.
and the dealer or where they were buying the car at told them that they needed to put a cosigner.
Okay.
So the husband asked the wife to co-sign. She was the one on my mortgage application.
Okay.
And so then a few days before closing, we got notification that she was added to that someone pulled her credit. Monday morning, because that happened like on a Friday. Monday morning, we call her, hey, what happened? We got this notification. And she goes, oh, my husband needed me to be a co-signer. So that completely changed the transaction, because now that debt was also her responsibility as she's a co-signed on that car.
Oh.
So we had to like buy a scramble.
Yeah.
We had to like figure. Well, long story short, we ended up returning the car.
Oh
We
my
were able
God.
to stop that transaction from going through, and they figured out a way to do it with just the husband.
Okay.
So then I was able to get her back off that debt. But that was that could have made it or break it. That could have that if
But
that
that's not the one that I was talking about. But we'll leave that one. I was talking about the other one.
the other one, yeah.
But
I don't remember the details on that one too much. But
I
this
think
one,
it was the one I had never seen you. I had never seen you so worried and concerned. Like
well,
I
no,
saw you
it's
like-
not. I think the one you're talking about is that the house had part of the house was knocked down during the transaction because it had liens from the city. They couldn't legalize it, so they ended up knocking down half the house. So that's not a common thing.
Yeah.
So the underwriter came back with a whole bunch of conditions after that.
That's crazy though.
But like I was telling you earlier, every file, everything is it's a different experience. It's like a movie. For me, I call it movies because there's like, you don't know if it's gonna be a horror story or a nice, little beautiful romance.
Yeah.
But the better the better we start, usually the better we end up finishing.
Yeah. And typically, what does it take? 30 to 45 days? Typical files?
No, nowadays they've come down. The turnaround times are a little bit less than that. I would say 20 to 35 days, should be for depending on the type of transaction.
So if you had to recommend something to someone that's starting either to work for a lender or a mortgage broker, what advice would you give them?
Don't take the files home with you. Don't just let it go at the end of the day and then start again fresh the next day, because it's one ends and another one's starting. So you can't take these files personal. That's advice for someone that's starting off. Just put 100% effort, and just don't worry that don't take that stress from a file because something didn't happen the way you wanted it to happen. Don't just the file ends, start over, and just another experience.
Okay. Well, if they want to reach you, I know you're not big on your social media, so I'm not even going to ask you to give them their social media because you don't look at it, which we're going to have to work on that, Oscar. Could you provide them with your phone number in case they want to get qualified or they have any questions for you?
Yeah, absolutely. My cell phone number is 305-302-9291. So I'll say that again, 305-302-9291.
So I personally know that number by memory. I was about to say it for him. Well, Oscar, thank you. Thank you for being here, for taking the time to stay here and share some of our experiences. So I really appreciate it.
Okay, well, thank you. Thank you for having me. And we'll see you on the next one.
Yeah, I'll see you on the next one.
Yeah.
So thank you for watching another episode of Built for Legacy. Remember to hit like and subscribe, and I'll see you in the next episode. Bye.